All right, we will continue with our exercises in reading these profile charts. And the first thing that I want to do is tell you that one of the key secrets behind reading profile charts properly is organizing the data. And one of the best ways to organize the data is to aggregate the data based on trading sessions. The futures, and in particular the ES Mini, are unique because they are a 24-hour market. This is also the case in Forex, for instance, but aggregating Forex is different from how we would break up the sessions for the futures. Basically, now I'm taking you a notch up in the usage of the profile. We're not just going to look at a day session. We want to see what happened in the evening and how is that going to influence what's going to happen in the day session. Comparing two different sessions to one another. All right. Now, even if you're not trading the futures, even if you're trading equities, analyzing the evening session and what happened in the evening session is going to influence the equities. As a matter of fact, that's why everybody looks at the futures at the beginning of the day to see what happened with the futures. Make sense? All right, so our first task is how do we break up things by session? It's in the setup of how I set up the profile. So in this case, I am using a special profile for the evening session and just a day profile for the day session. The day session is by far the more important of the two because that's where the bulk of the volume takes place. But nevertheless, if you're going to see a gapping market, I can predict gaps from the evening session relative to the day session before the market even opens. So let's take a look here. We have the evening session, and notice all the reference lines. Now they're not labeled, but if you want to identify any of them, I can identify them for you. If you notice, we also have an initial range for the evening session. We have a price point of control, a volume point of control, value area high, value area low, volume area high, volume area low, and these other lines are from the prior session. So now when we begin stacking up the profiles next to one another, we begin to see a whole different dynamic come into view. And let's take a look at one key example here to show the profile advantage. One thing we've learned about is the single print. Okay? Remind me, why was that single print so important? The software is designed to detect those single prints because they're so important. And you see that black line with the red circle on the left-hand side of the chart, right here? Okay. I have a tiny single print with the letter J. Okay, look what happened in period J. It opened down here below, right above the price point of control, right here, and then it jumped, took out the range, the high of the day, and then created a single print that not a single other letter was able to come back and print in front of it for the rest of the whole day. That's why we have a single print. That's somebody powerful that came in that period and started buying and continued to buy for the rest of the day. And that's why every time prices came down to that level, they bought. They bought. So what has that identified for me? Smart money. Okay? And what was the smart money doing? Buying. How do I know that they were buying? What happened to prices? They went up. What happens to range extensions? They go up. All right? Now, markets have a memory, and I want you to have that too, because that memory is very, very important. Notice what happens in the evening. We open up here, because that's where we closed here, and then we open here. We come back, and at the A period, we really don't drop very often. The initial range is just down to here. We get a lot, we come back up all the way up to value area high. And once again, is it a coincidence? Is it random that in the evening session, they come all the way up to the value area high and can't get above it? That's just by chance. It just happened that way, random, right? Okay. Hopefully, you're now beginning to see, wait a minute, there's structure to this stuff. There's reason why prices come to a certain level and stop. This did not happen by chance. This is the value area from the prior day session, the value area high, and we came right to it, couldn't get above it, started to see some selling. How do I know that all this activity was selling? Who can help me with that? We get a big cluster of activity. We have a lot going on. Where did I close the evening session? Below value area low. All right. I know it's hard when you're not used to it, but these things pop at you when you are accustomed to it. Take a look at that. So this was obviously selling. Now, an interesting thing happens, and which period does it happen in? The very last period of the day, of the session, of the evening session. Period I. All right? What happened in period I that is so interesting? Period I drops down and comes right back to the single print. Why didn't we close down here at the single print and instead ended up closing up there? Coincidence, random stuff, Right, exactly. That buyer is still buying right there, okay? Now, we're going to move on, and we're going to take a look at what happens the following day when the session opened. Buyer is still present. They have not gone away. Now, this is the kind of stuff that is very difficult to see from candlestick charts, to know smart money, there's a big buyer here, are they really going to let go? It could be that they've decided, for whatever reason, they're not going to buy anymore. But that little buying tail at the bottom makes me somewhat dubious. Now let's see. The market opens right here, right where we close the evening. Market opens right here. Then what happens? We drop. All right? We drop right to where, again, that buyer was. And notice what happens with A period, shoots very high. Is that big buyer still in town, or has he left? He is still there. All right. Now, let's continue on and take a look at what else tells us this buyer is still present. I want you to count 22 TPOs above the open. Count letters A, 1, 2, 3, because when the market first opens, that's all you're seeing. A's, 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 22, and I only have 6 below the open. Is that buyer there or not? All right. Okay, so that buyer is still committed. So definitely at that point, at the beginning of the day, I am thinking I really want to buy rather than sell. I'm not thinking about shorts. The question is, where do I begin to buy? And let's continue on and answer our question. Buy when price drops back to the open. If we are lucky enough to get a chance for price to come back and test the open, I would buy 1 tick above the open. And where would I place my stop? 1 tick below the low of the day, in case I'm wrong. All right, that's a nice little trade. And my target will be, I hope that we can take out the high of period A. Well, let's continue on and see what happens. Buyer is still present in C period. Let's take a look at C period, opens here, again drops down, but notice that same level again. And what happens, where does D open? D opens up here. So obviously he continued to buy. D comes back down again, but look at where it ends up closing, way up here. That buyer is still there, okay? However, there's something that is bothering me now. Can anyone detect what it is? Exactly. I'm not getting range extensions. I'm not moving up. I mean, they are buying, but they're not really putting their heart and soul into this, okay? So they're not really very forceful. So let's see what continues to happen. But notice this is the kind of thing that the profile really helps me to see. Now what happens D period? Buyer's still there. Buyer still present in E, F, G, H, I, and J. So ultimately, if I had the stamina, I would have been able to stay in that trade, and actually in period H, I would have made my target. And then we begin to take it out. But I submit to you that it's not really the same buyer that's buying now, okay? Because the commitment in terms of range extensions wasn't there. This is another buyer that has decided he was just lifting it up enough not to let it drop to create enough momentum to attract other buyers. And the other buyers took it up higher. And as a result, take a look at what happened at the end of the day. K period is above 150% of my initial balance high. Do you see that level there? Okay, now we're really getting way up there. Above value area high, certainly I would not even consider any more longs at that point. Possibly I could be thinking about a short, but once again, in uptrends, I am very reluctant to take anything against the trend. That's my own general philosophy. I always like to look for the opportunities so I can use the momentum of the trend. I try to stay with the monthly trend. If you want to identify, I use the monthly trend as my guide. All right, but I mean, it's been up in all of them. We are going to venture into another example. And this one is even more interesting than the one before it. And I have done a special exercise because I know we have someone in the class that is a very big fan of candlesticks, and I am going to use her help. You see a candlestick pattern here. All right? Forget about my profile for a little bit. And this is what the candles look like. What would we anticipate is likely to happen in terms of momentum and sentiment in the market? Would you be willing to take a long at this point based on this candlestick pattern? Not on the candlesticks. All right. All right. Now, certainly the candlesticks, if we follow the logic of the candlestick patterns, are pointing to negative pressure in the market. And if I were to follow them, I think it would be very reasonable if I took a short based on that pattern. I would not consider you to be doing anything bad at all. Now, I've removed the candles. I have removed the veil from your eyes. You get to see it as it is, all right? This is what's inside those candles. Let's take a look at what was really happening and what the profile tells us. Once again, these powerful surges in the market. The footprint of whom? Smart money, right. In this case, this is not responsive behavior. This is what we call initiative behavior. Why is it initiative? Because they took the initiative to push prices higher. They weren't responding to a value in the market. The market opened, those guys came in, started buying, pushed prices higher. Okay? Now, notice the shape of this particular profile. And remember what I told you about the pattern of auction behavior. We get a directional move. What's going to come second? Stopping price. Do you detect a stopping price anywhere here? Not yet. I mean, even this is a very small cluster. So this was a very strong thrust. And we never really, the stopping price did not become apparent until the evening session. They kept on going, and they really pushed the market higher. That's a very committed buyer. That's a buyer that put a lot of money into the market. And they didn't even begin to take their money out. This is in the evening session, so you can't tell me they took their money out in the evening session, and I'll tell you why. There ain't enough volume in that evening session for them to even get out probably one price, at one single price. Evening session is very small volume relative to the day session. Usually somewhere between 10, tops 15% of total volume of the day session. So we know they haven't taken out their money. Now, we had a rotation, and we closed below the low. That evening session ends up looking like, what is the famous shape that you are all familiar with? What is this guy? Thank you. Say it again.
Spinning top.
A spinning top. What do you think? Is that a spinning top? A doji. Let's call it a doji. How's that? All right. Let's go back. And so we get a doji. And then notice what happens the following day. Wouldn't you have expected prices to continue higher? And they sure did. Because that buyer really hasn't started taking out any of their money. But take a look at what starts to happen here. We start to get a fuller rotation around here. But at the end of the day, so these guys have started selling on this next day. We close lower. Then we get another day, and look at value. It's dropping. So the candles were showing that, in fact, prices were dropping. But here's where the candles failed us. Where was the commitment the strongest by this particular buyer? Right in this area. And this area had not been tested yet. And this is some strong, I mean, you got to put a lot of volume on the table to push the market this much. How many points was that? 1492 all the way to about 1504 or 1503, let's say 1503. From 1492 to 1503, that's what, 3 plus 8? 11 points? Is that about right? Did I get my numbers right? Okay. How many people do you think really can push the market 11 points? That's a major player. If they haven't managed to extract their money yet, are they going to abandon it and let it continue to drop? Absolutely not. Now notice what happens. They created these three candles. Everybody now is starting to short, thinking we can't go any higher. We open, one tick above open, drop like a rock. We're dropping into the lap of whom? This big guy, right here. All right, we come to here and he says, that's it, I've had it. Let's buy them all up. Take a look at that volume that comes in. Look at that, for a single print. On every one of those price levels. Okay, buy, and takes it all the way up. Now, when the prices move back up here again, what happened to all these shorts? Well, most of them had to cover. Many of them will cover. And so when they're covering, what's happening? They're fueling his move higher. As they fuel his move higher and prices shoot higher as they're covering, who gets to sell to them? Strong buyer. It pays to be strong. All right, sure. Now all, these guys with all the shorts, now they're going to start covering, and they push the prices higher. It gives me, strong buyer, an opportunity to get out. So now notice what's really interesting. The stopping price that was here, where they were pleased to sell before, we're right back up at it, and we continue to sell. So I had a beautiful candlestick pattern, but because my candles don't give me the same type of analysis, I would have been probably trapped here, especially when I see the open like this, a drop at the open that's so strong, I would have been inclined to take a short right at this point, and I would have been in a lot of trouble. And this is why a lot of people make errors in trading. You would be amazed how many people, when they saw this, started shorting. You have to recognize and understand that pattern was created by a machine. The machine knew that there were a lot of people that were going to take shorts right here. Don't for a second think this was random, or this was unplanned, or it happened by chance. No, they knew exactly what was going to happen, and that's exactly what ended up happening. And so it happens every day in the market. Now, you would say, well, are they manipulating the market? Or it's part of the world that we live in. There are algorithms that govern the market and control the market, and they can read and create candlestick patterns like the best of them. That's not to say that candlestick patterns will not work. I mean, there are times when they do, so don't knock them. But with an added, the profile advantage, you now have a lot more power. You can see, when you saw that candlestick pattern, at least you would have been patient to say, well, I'm not going to take a short even though we see this dip, because I want to see how this guy will respond. Are they still there, or have they abandoned the market? And once I begin to see their response right at this level, I would have been comfortable taking a short down here if, in fact, the market was able to take this guy out and continue lower. Then I'm okay. But that's the difference between someone who has access to the profile and can see a different picture inside the candle. Does that make any sense? We have a strong buyer, but 3 consecutive closes, 3 sessions, lower closes every single session. Oh, it just happened by chance. Of course not. Of course not. And then we come down here and it shoots up higher. Okay, and we have a strong, what's known as an open drive lower, as if, to put salt on the wound. All right. And then the strong buyer decides to protect the territory right here. They come in, and it changes the dynamics of the day completely. Now, mind you, that the next day, actually, we drop back again. but that's what happens in the market. So they took out a lot of these folks that had the shorts, pushed it higher, and then we started coming a little lower.